The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here. And what's really important about this period right now is that we are starting to see the indices, various indices bumping into strong resistance. But what's really important is that the technicals at this particular moment are still very strong. This is going to be very interesting. I think a mild pullback, choppiness into maybe, well, we come back Tuesday, maybe even Wednesday, the day I do my webinar. I think then we have a consolidation and a rotational consolidation with the weakest areas continuing to be weak and the strongest areas holding very well. Hey, let's just go through the numbers and we'll see what happens. Dow's down 25, having gone from 21,712 to yesterday's high of 24,288. I would say that that's a pretty big rally. And what we're really looking at here is that there's very good support all the way down to the 23,920 to the 23,800 area. Most importantly, that weekly strong 1, 2, 3, 4 green candles, nice big green candles, is saying to you, hey, we've begun the turnaround. There's a Chapman wave. Ooh, can I do this? Yes, I can. Pattern that we were looking at, that big arch formation, and we haven't taken out the low of, where was that? That was the low way back in August of 2017, around about 21,600. We went all the way down to 21,700s. And that is really portending a test of the 24,002. We just did that. It touched it exactly 24,000. Let me make sure that I'm hitting the right button there, right there. 24,321. We just went under it. That's the 9 period. Sorry, that's a 14-period weekly exponential moving average. We're nicely above the 9-period moving average in the weekly chart. So more than halfway through the week, tomorrow's close, Friday, with options expiration, it's going to be very important. Why? Because within the context of the market, having had such a huge decline, to see the MACD in the weekly chart start to improve is very important. It's not even close to closing positive with the green line above the red line, but the stochastic has gone from, what was the low? I think it was around about 12%. So let me go down here. Stochastic. Yeah, it was around about 12-ish%. Now you're at 33%. I'd say that's really good. And it's helping improve the monthly chart. We have got a situation here where within the context of the various indices, you've got the Dow in leg D, possibly a peak D today if there's no new high. You've got the S&P. Now in the Chapman wave methodology, all of which we'll be discussing in great detail on Wednesday, the 23rd, all-day webinar. Should I do that now? No, I'll wait. What we are looking at is within the context of the various indices, the S&P is the only one that hasn't gone to a leg D. It went to a leg C and then a possible peak C today. There's no new high above 26.25.76. All we need is 26.25.77, and the daily has gone to a leg D, and all the little chickens, all right, I don't know what the expression should be here, all the little ducks are in line, ready to take a bit of a breather. And then you've got, you see the V-shaped pattern is a little bit lopsided. Once it's lopsided, I have to activate the arch formation. And that says to me There'll still be fabulous action to the upside, but not as strong as the downside. The Qs, you'll see in a moment, did have almost a perfect V-shaped pattern. So that's just saying that the stochastic at 97% is giving tremendous support. Remember, I love to see the stochastic at 97%. We did not see the stochastic down in the daily chart under the single digits for very long. It was very brief. And that's the reason why I was very pleased to see the move to the upside. Okay. Very importantly, support in the S&P is at the 26. I'd say the 26.12 to 26.08 area on any sharp pullback. And on the upside, you've got very strong resistance just a little bit above, right at the 26.33-ish area. The QQQ, 1, 2, 3 QQQs, this is the index 100 trading vehicle, did make a leg D, possibly a peak D if there's no new high above 163.78 and you're 162.67, up 33 cents. Still pretty good action, I must say. IWM led us down, then led us up, and now, and then it had a weekday 3 days ago while the others were running very nicely. But if you look at the action today, 145.30 so far is the high. Trading at 145.05 right now. Yesterday's high was 145.25. So what we've done is we've extended. Remember, in the Chapman methodology, I'll go through this and I will give updates. I'll give pre-dates to my webinar on Wednesday by sending stuff out beforehand. In the waveform, you've got a floating letter until you make a peak. Once you make a peak, you can call that a peak, whatever it is, A, B, C, D, E, F, or G. But until you make that peak, it's just a leg. It's a floating letter because it keeps moving to the right with the new high or to the left with the new low until it makes a trough in the downside. So what have you got? You got the Dow, you got the SM, you got the Dow, you got the Qs, you got the IWM Russell 2000, all at Ds. And not necessarily peak D, but in D, IWM is in leg D. Dow so far will make a peak D if there's no new high, and the Qs will make a peak D if there's no new high. However, what we're looking at here is the stochastics at 95% in the daily IWM, and that's really important. All right, we want to go to gold. Gold is held in the sideways consolidation for about 12 days, 1, 2, 3, 4, 5, 6, 7, 8, 9, about 10 days. And that's that rectangle pattern that can last a lot longer than your patience. Usually when it's at the upper end, eventually you have a little dip to the downside, and then you come back for the big test of the inside. So I'm going to be looking at this very closely, about 12.91, down 2.5. What are we looking at? We're looking at silver, which did go underneath the rectangle low and has done it again today at 15.54, consolidating very nicely, taking a lot of time, not price. And at 15.54, down 0.09, that's going to be important. If you look at the dollar is holding nicely in the upper part of this lower rectangle, held the 200-period exponential moving average support at 95.26, trading right now at 96.14. Did it make a new high? Yeah, but I think I'll check that out. But it's acting quite well. The chart is acting very well. So, Basil Chapman, Tiger Technicians Hour. We're right back. Let's look at the E-minis. Okay, do a little meditation exercise right here. Basil Chapman, Tiger Technicians.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi folks, we're back. Basil Chapman, Tiger Technicians Hour. Don't forget, go to the front page of TFNN. Check out my webinar coming up this Wednesday, all-day webinar. And believe me, the education that you'll be able to get when you're able to study the pattern, then practice the pattern, and then do it live all day. That's what we're going to be doing. We're going to be looking at charts like this. We're going to be talking about the stork leg formation. You click on the dollar, the weekly chart, looking at the peaks. We'll label them. If you've never done labeling, you'll see that it's really pretty straightforward to a certain point, and then it gets a little bit more complex, but it's also the patterns that are way more important even than the lettering. This is really an ideal way to study the left side, right side, price, time match. Look at this beautiful cup formation here in the dollar. You'll be able to look at that left side, right side, price, time match when it went from the high back in, where was that? Back in May as it was coming down, goes down to a low of 88.25. And then I used a particular measure to be able to get back to the right side, and it went right to that same level that we were looking at. So these are all things that you can study. Look at the, let's go to this for the moment. Let's go to the E-mini. Look at the way you've gone to a peak D in the 5-minute chart. Let's just use this as a good example. And look how you've walked the 14-period exponential moving average. Look at this other moving average, how it's been fantastic in giving you a guidance here. So these are techniques that are very simple to implement, not always simple to because of human emotion, but look how much it takes away from the human emotion when you crossed positive over there, when you went over this 200-period exponential moving average, the blue line, and you've just held there. When you're holding above the 14-period, where you're using the 9-period moving average, just as kind of a cushion, walk the 9 EMA if you can. And so far it's done that. How do you use these things? What does it mean? How can you implement a new position once you've made your peak E in this case and you start to pull back? What about when the MACD didn't cross negative, when it deflects back up again? What is the implication? We will do this live so that and I'll ask you to do it. Each one of you will be able to do it. Ask me questions as you're doing it. What about money management? Where would the stop be? How come you could actually still be in the position from way down here, and by just using one particular moving average as a stop? These are all really important things. So this is what we'll be going through. See the front page of TFNN, a webinar, all-day webinar on Wednesday the 23rd. All right, let's get back to our story. So the dollar just double-topped. Well, I can't say double-topped, but it made a double test of the 96.26 area from 3 days ago. Did it today, hasn't broken above it. But I must say, when I look at this weekly chart, remember this pattern that we're looking at over here, that stalking formation, it fulfilled every requirement. And now what we've got is a brand new rectangle formation, almost like a cup formation that went to a high, slightly higher high. In this case, it actually did a couple of times close above the left side high of 96.98, made a week of 17th of August, come down, and we haven't yet tested the bottom of that. In fact, it's holding very nicely in the 96 to mid 95 area. So I'm saying that the dollar is still in play, and that at some point it won't be in play. But at this particular point, I think it's very important that it holds here. Let's go to the EUR USD. I was asked about this the other day. On these very quick peak A, peak B, peak C. Well, let's go to this in a Chapman Wave methodology, because I said that I will start doing my course earlier on. I'll show during my show, I'll show the things that we're looking at. In the Chapman Wave methodology, there's a technique that I call very quick peak A to B to C to D, especially the C to D part. In this case, it went very quickly, skyrockets up in a peak A. I call this a single leg A, which came down and did a big retest. Then started a brand new buy mode by going MACD's good, stochastic's good, and it goes peak A, peak B, peak C, higher highs. Then it pulls back, actually holds the low that was made on the 28th of November, starts to rally again, makes a cup formation, breaks above it, and goes to a D. Pulls back very sharply, and then it goes to an E, pulls back even sharper. Then it has that single leg A. It's like a leg A, except this was an F, went right to the 200-period exponential moving average, and now look. The MACD, since it crossed positive on the 16th of November, not once has it closed under the red line. And that represents exactly what you're looking at here in the price. And if I look at this, there's a beautiful cup formation like that, and then like that, and then it stalled below the previous high that was made back in October in the 1.16 area. So what happens, it goes to 1.157, and then it pulls back, and now it's at 1.13. But that happened to be peak F, and the MACD crossed negative, and the stochastic. So the euro-dollar currency pair, the euro, is looking very weak right now, but it hasn't broken down. That weekly chart does look terrible, and the monthly chart just looks like it keeps failing to rally and support. So that's saying to me, until the euro, I've been saying this for a while, goes into the 1.61-ish area, about 1.16, I have to just look at this and say, hey, just a big trading range. Look at the USD JPY. This is the yen. And the yen sometimes follows the direction of the dollar and sometimes doesn't. There it is. It didn't make a big arch formation, not yet anyway. That aberrational spike to the downside to 105.18 on the 3rd of January. So far, we're looking at it as being really aberrational because we haven't gone halfway into it to be able to say, well, we're going all the way down to the low of 105.18. In fact, what it's done is it's closed once, and maybe today again, above that ugly candle of the 3rd of January with a high of 108.92. We're at 109.04. I would say that this is good. In fact, I would say that this has started a little mild, leg B, and it's helping the weekly. So this is saying to me that maybe the worst is over just in this particular period, as gold, I just want to mention this again, as gold is going to take a breather. It's gone sideways. Sideways is very good. It's a technical term, which just means that you're in a trading band that is fairly narrow. And in this case, I like to look at it as a rectangle, high-level rectangle, and that's really important until gold starts to trade above 1305. I think that this is kind of just stuck until it breaks down under 1270, still just stuck in a sideways range. Can go on a little longer. I think the end result is that there is a little bit of a slide into the 1270s, 1260s as the dollar rebounds. And then we will see, does that leg D in the weekly chart of the gold contract, does that kick in? And that'll be really important. Let's look at the TLT, which is the yields, 120.39, a little bit of a rally. I'd said to subscribers to my opening call that if there was a bit of a rally in bonds, we might see a little bit of a weakness in the Dow. Well, the Dow's down 23, the S&P's up 4 3/4. So it's very selective. But what it is saying is that 123.86 on the 3rd of January, the TLT, the iShares 20-year Treasury Bond ETF, kind of stalled at a peak D in the Chapman wave and has really been consolidating. And I wouldn't be surprised if it's consolidating between 121.70, let's call it 122 and 118 over the next couple of weeks. Let's see what the E-mini is doing. It should be pulling back a little bit. Yep, it's in that rectangle going towards the lower part of this rectangle. I have to tell you something. These rectangle formations that you will study next Wednesday are formidable. Wonderful tools. I'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. So crude oil is down 48 cents at 51.83. Peak C, a little high-level consolidation. I think it's going to try for another push towards the 53s. That's the way it's looking. And I think I've covered everything that I want to do. Oh, VIX index. The VIX index trading right now, VIX, there we go. Down that low, I did say there could be a little bit of a bounce. I still think there could be a little bit of a bounce, and I'm just saying that the 1770s is the 200-period exponential moving average. That's at 1992 right now. 3620 was the high in the 26. What a pullback. Half, cut in half, more than half. So if this is what I'm looking at. I'm not sure yet. I'm just waiting for some information, some planning. I might be doing my show early tomorrow at about 7 o'clock in the morning. It'll be repeated at noon. I might do it at noon. I just don't know yet. I'll know in the next little while. So let me just put it this way. I'm looking at the bigger picture over the weekend. I'm suspecting that because of the S&P, that there is some, maybe it's options expiration tomorrow. I don't know. But over the next, between today, Friday, and Tuesday, I'm anticipating that the S&P just gets either peak C1, C2, so it gets very close. Let's go. Most people have the SPY. I'll just do the SPY. SPY has a high of 261.97. The high today so far 261.70. So it has 28 cents to go above the high that's already been made. If there is another leg D, and it's very mild, and then there's a pullback from there, then I suspect that the SPY at 261.63 right now will come back to the 258, maybe even the 257s area, take a couple of days, and that's where we get either a test of new highs after that, and that's why bonds over the next 4 sessions or so could have a little bit more of a rally and then maybe pull back again because money goes back later in the week, next week, goes back into stocks after a little bit of a hiatus. Or there's a deeper correction. You know, I'm looking at the news events, and I just tell you that there's a real good chance that a bunch of conflagration takes place of opinions, and it does affect the market a little bit. But right now, the more I thought about it yesterday, the more I thought, if the XLF, the financials, had such a spectacular move from 22.05 to 25, what is the high yesterday? 25.57, 3.5 points, about a 12% rally in the whole sector of the financials. That's even with Morgan Stanley coming out with disappointing news. That says to me that this is the last quarter where you had, from October, we had the sell signal in all the indices, and that includes December's horrible, horrible action in the financials. I think that that's very good news, because after all, certainly it can get worse, but so quickly after such a good report, and that the report was at the end of December 31. I just don't see what's going to take the financials just at this particular moment down to 22.05, below the 26. So far, I have to consider this as really good news, especially the fact that I've said since I did my last webinar, I said we want 2019 to include the financials. Well, they have up until now for the first 2-3 weeks, but that's not good enough. I want it for at least into February, the second week of February. I want to see the financials not breaking, closing under the 23.80 area, instead just pushing slowly higher. I don't care how long it takes, but I'd like to get to the 200-period moving average of 26.51 and then start holding there. To me, that would be really good action. All right, so this is the picture that I'm trying to paint in case I have a little trouble with tomorrow, but so far I'm on for tomorrow. It'll either be recorded at 7 for replay at noon, or it'll be live. I'll know only a little later on the day. So I want you to get out of the way, and then I want you to look at Crone, is a stock I was asked about in the den. Can I look at Crone? Looking for a pullback to buy either Cronus or maybe add to, or even CGC. So Cronus is at 1384 right now. It's made this cup formation. So let me show you something. Here's a technique that I used. You see this cup? I drew it in a while back. Now I'm going to just do this. I didn't have a chance to do it before. Now if I take this right here and I do a left side, right side price time match, and this is what I'm going to teach on Wednesday. I mean, I could have had a webinar on each one of these techniques. Maybe that's what I should have done. This is the cup formation. Not only that, it's the cup formation with the Chapman wave inside wedge target repellent line, which it hit exactly. Look at that. So these are techniques that I'm going to be teaching. Cronus did it exactly to the, no, it beat it by 1 day. It was 1 day early. Oh, what can I say? 1 day early in this particular technique. Now, what's really important about this technique is, just do that and that, okay, is that I'm adding to it, I'm going to be teaching what this means, the left side arch in the MACD and the right side arch in the MACD, where it becomes a flat and where it becomes an M. I'll be teaching about what's going to happen here with the stochastic. So in the meantime, very good action. The next level of resistance will be the high that was made on the 14th at 14.15. It's trading at 13.85, up 42 cents today. And if it takes that out, then we've got the chance of a leg E in the monthly, because it could take out the high of 15.30 that was made in September, the week of September the 21st of 2018. My thinking here is going to take a little bit of time to do that, but this is on the right track. Everything about it is good. And what I am looking at is, the question is, I want to buy both. So I'm going to say to you, wow, this is a tough one for me, because you're at the resistance. And the normal thing I would say to you, look, it's got a cup, a potential cup and handle, not one of my favorite patterns, because when it breaks out, it invariably comes back into the handle. So I'm just going to say to you, if you use options, I would look at a February option, and I would be right in the money. I wouldn't be playing games. I'd be in the money. I'd be 13.50. If there is a 12.50 option, you're paying up for it. But I do that just for now while you're thinking about it. And that means that it could go down from, let's just say it's a 12.50 and you're up $1.80. You could be $2.25. You might be paying $2.25. I'm just guessing. So that could actually shrink all the way down to maybe 50 or 35 cents, because if this suddenly takes a dive and it starts to trade under 12 in the next week and a half, but that might be the gamble that you take, that you're paying $250, but now you've got yourself something that you're in play with, and that's your risk. That's better than buying, say, 1,000 shares, putting up 13,830 and putting that money up. So this is the way I would think about it. Now, how would I play it otherwise? I would start a position today, 13.80. I'd only start the position, sort of nibble on it. My real position would be at $12, between $12 and $13.10 and $12.87. That's really where I would like to start the position. I think it's going high. It could be choppy, but it's going to go high. I'll do CGC when we get.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. No
matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks. So just a chunk of things that are really important that came up. It's almost like Technical Friday that I've got these questions. Let me go through one at a time. First of all, remember I spoke about this very narrow trading band in the E-mini and the 5-minute chart, made a peak D in the Chapman wave. Actually, at this point, because of time, I have to put in a down arrow, remove text, put the down arrow because of time, more than price, because price, well, it's done. So it was just about, look, there's a gray A and a gray B, but it hasn't broken the high that was made at, I'm just guessing, at 26.23, round number high. And then what does it do? It starts to rally. All of a sudden, a beautiful green candle right on the edge. Remember what I said? The most money is lost sometimes when you think it's going to break out of a rectangle pattern, and all it does is it gets to the border. I shouldn't mention the word border. It gets right to the edge and then pulls back, and then it comes to the bottom, and it gets right to the edge, and instead of breaking down, it goes right back in again. And this can last a lot longer than both your patience and your money. So this is what we're looking at. Now, if it starts to break to the upside, I'm going to call this an E/C. That's a technique that I'll be discussing in my webinar called the alternate wave count. But you don't have to think about, oh my God, E is it's going to tank, or C it's going to go higher. No, you just follow the rules. NACD is negative, stochastic is turning positive, but it is holding above its key important moving average support. That's what you got to look at. All right, here we go. All right, question about Croesus real quickly, CGC. I've noticed that they're actually all moving kind of in unison. So for my subscribers, we are in a particular situation with the medical cannabis area. And I'm just, all I can say is that I didn't want to go into individual stocks. There was one that we wanted, GWPH, really good company, right in the right area. Right here, it hit 90.14 after making 179 high. Peak E in the monthly chart plummets down to 90. I would say that a pullback of about 80 points on a $180 stock is a serious thing. And then what happens is it goes right there. And I said, right there, I said, oh, we want to buy it. And I put in a price of 107 something. Oh, it just didn't even give it to us. It just took off, and it went from that area. It was at 109 or 108 when we wanted it, and it just took off in today's trading at 134 in leg B. I like this area. I think I'm not interested in Bitcoin. I think this is the sexy area right now, and it's going to be a very volatile area. It's in the big move up at this point from the big move earlier when it went to the highs. MJ is marijuana ETF. MJ, and that's trading at 30.73. We're along this. I like it. I mean, alternate harvest is not, It's a way of doing it. I would have preferred to have been in one of the stocks. I liked NBEV a lot. It was nice and low price. NBEV, and it just took off. And it's now at a peak D and it's pulling back. Maybe we'll come back into an individual stock. I would have preferred to have been in a $6 something or other than 30 or 28 or whatever it is. But that's the way it is. All right, so that's there. And now the three questions that are important. One is, hi, Basil, will the market make a high next Wednesday or make a low next Wednesday? I'm suspecting that if the leg D in the S&P isn't made tomorrow, oh, I just did this. I'll do it again. If the SPY doesn't make a new high, if it makes a new high tomorrow, maybe on Tuesday when we get back, there's some selling comes in. I'm not talking about, I'm not questioning whether it should be make a high next Wednesday. I don't know about a low, because a low means that that's the one. I think it could make a high in the next couple of days between Friday and Monday, Tuesday. And then I think we have a bit of a hiatus. Take a breather. Bad news comes in. That's just what I'm thinking. But it doesn't whack the market. I have 300-400 points down in the Dow. It's not a big deal after such a big move. Now, that follows up with two questions that I had. One is question, any thoughts on shorting? No shorting. No, I haven't had a single short for quite a while now. But I am about to look at some shorts going into next week. Why? Because I think the stocks and the indexes that have failed to move up with the general market are vulnerable on a pullback. And that's what I'll be looking at as a trade. I'm not thinking they're going down to the lows of December. I'm just thinking as a trade. And yeah, we might just reverse course. We might just go to the short side in an index and let it play out. And then I'm looking to switch back. I want to be buying. Within a week, I want to be buying again. So I answered that. Now I had a question, good question. What do you make of the total lack of volume and movement? So when there's low volume, and a lot of people, so volume is not my thing. Now, I could easily have poo-pooed it by saying volume, schmolium. Hey, I don't do that. I know people that use volume and use it fantastically. I use unbalanced volume, and I use it very well. Look at that ictus at the bottom, right there in the unbalanced volume. I'll be dealing with this on Wednesday. I'm teaching unbalanced volume, how you use it. Look at that V-shaped pattern, just a beautiful low. And we actually bought the Dow. Look at this is the Dow, INDU. We were buying all those bottoms right there. I liked it. So that V-shaped pattern was very important to me. So I use unbalanced volume. So all I can say is, can I take time now? Yes. When it comes to volume, my thinking is that low volume allows the big players to shove things around. If they want Amazon it's trading at 1687.81, and they are getting in or getting out, they're able to push and give it a little shove. Let's see volume. So its volume is 2.2 million. Yesterday it was 6. So for this time of the day, 2 million, yeah, I would say it's probably not great. You've had 4 million, 6 million days. Oh, there's a third of the day going. Yeah, volume's okay. So they could use that to get the price. If they wanted it at 1687.40, they could do a little they could do some selling of one position and then just triple that position on the upside and buy in. They're able to do that. So I'm not the expert when it comes to volume. I can't say I'm the expert when it comes to unbalanced volume, but believe me, I use it all the time. So I kind of know it. And I'm looking at unbalanced volume right now and rallying with Amazon. I didn't want to go there. I wanted to go. Let's just go back to the Dow for the moment, just for convenience. Yep, the unbalanced volume it's still quite good. It's pulling back a tad. So that says to me it's at the upper range. It's getting ready for some kind of a pullback, but I haven't got that pullback just yet. So I'm answering that and saying, not my area of expertise. I can only say that it's like Options Friday. You think everybody comes in and says, boy, am I going to whack it? Am I going to buy it? No, they come in and they say, let's see what happens. And then if they see vulnerability they get those positions and they add to that, and they can do the nudging that accelerates the move. That's what light volume can do, and that's what volume itself can do at certain moments. Nudge. It's the nudge factor. So I hope that for me clears it up. I'm clear in my mind. I hope it's clear to you. I'll be back. The Dow's down 26. Let's look at our rectangle in the E-mini. Oh, still in the rectangle. Amazing.
You are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks. We're back. So a couple of things going on right now. If you said to me at exactly 12 o'clock when the E-mini was trading at 26.22, 26.23, that you would go 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. You would go almost a full hour, 13 2-minute bars, 5-minute bars, and that you will not break the low that was made immediately after. I would have said, what? I'm looking at the MACD down sharply. I'm looking at the stochastic going from 95% to 51%, and we're still in the range. I would say the longer you wait, the longer it will take. But at some point, the low of the rectangle should be pierced, and then you try to come back in, then you start to see whether you're making lower lows or lower highs. Now we just tested the low exactly, and it's trying to bounce. So this is what I'm going to be teaching. What do you do in a rectangle formation? What are the MACD and stochastic telling you? What are the very important indicators? We still haven't got a negative indicator. It's really close, yet I suspect that the 2618 level on the E-mini will tell us. So I'm just giving you, every day I've been giving you a little bit of a class in my webinar that's coming up. based on all my Chapman wave techniques, the ones that I think are important right now. Of course, in a whole day, I still couldn't do all of them, but we're going to practice the absolute key ones. And as other things come about, we will just discuss it. I'll take the time to talk about it. And I'm going to answer every one of your questions as you do this webinar, because I want you to be able to practice it. I'll even wait for you to try to get your platform to match my platform as much to whatever extent it is. So, all right, here we go. We're just about to wrap up. Let me just do a couple of things before we do that. I wanted to show you, where was it? Yes, I wanted to show you that within the context of the different indices, I want you to go to the XL, that's it, the XLE. The XLE is the energy sector. Look, nice bounce, holding steady, not giving up anything. MACD's good, stochastic's good. Very nice V-shaped formation, but you've got to have follow through. Look at this monthly chart. Look at that, Chapman wave, inside track, up channel. It's in that up channel. This is going to be very important, because if energy starts to break to the upside, that should help the oil service stocks, etc. Hey, this is a very interesting period. I'll be back tomorrow sometime. It'll be right here at noon. I don't know if it'll be taped or live. And check out the open. Check out my
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.